Have you been keeping an eye on the recent stock market trends? If so, you might be wondering what's causing the major indexes to be on track for their best month in over a year. Let's take a closer look at the performance of these major indexes. Recently, they have faced some slight losses, with the Dow Jones Industrial Average and the S&P 500 both losing a minimal 0.2%, while the Nasdaq Composite slipped by 0.1%. These losses, however, are just a small blip in the grand scheme of things. Despite these slight losses, the overall performance of these indexes has been impressively strong. The Dow Jones, the S&P 500, and the Nasdaq Composite are all on track for their best month in over a year. This robust performance is a testament to the resilience of the market, even in the face of potential challenges and uncertainties. One key indicator of market health is the VIX, a measure of market volatility. Recently, the VIX closed at its lowest level since January 2020. This low level of volatility suggests a relatively stable and predictable market environment, which can be favorable for both individual and institutional investors. So, despite the minor losses, the market appears to be on a positive trajectory. But what are some factors influencing these trends? Stay tuned as we delve into the influential factors that are shaping the current state of the stock market in the next scene. It's important to understand the various factors at play in the stock market. Let's delve into some of them. One of the key elements that can cause tremors in the stock market is inflation. The upcoming personal consumption expenditures, or PCE inflation reading, is a prime example. This measure of price changes in consumer goods and services is closely watched by investors and policymakers alike, including the Federal Reserve. Any significant deviation from expectations can cause ripples across the market, influencing both individual stocks and broader indices. Next, let's talk about Cyber Monday. This online shopping extravaganza can have a significant impact on certain stocks, particularly those in the retail and technology sectors. Updates on sales figures and consumer behavior during this event can sway investor sentiment, and consequently, stock prices. And then, there's Roku. The streaming platform stock recently climbed by 8% after an upgrade from Cannonball Research. This highlights how analyst upgrades and downgrades can have a direct impact on a company's stock price. Investors often look to these assessments when making trading decisions, leading to shifts in demand for the stock. Finally, we can't overlook the influence of geopolitical events on the market. Take, for instance, the effect of the temporary truce between Israel and Hamas on oil prices. Such events can have far-reaching impacts on various sectors, especially energy, and can trigger significant price movements. These are just a few of the many factors that can influence stock market trends. Now let's take a look at some specific sectors. Different sectors can experience unique trends based on various influences. Let's look at a few recent examples. On the Toronto Stock Exchange, we've seen technology shares rally, providing a significant boost to the S&P/TSX Composite Index. Despite concerns about rate hikes and geopolitical tensions, the TSX has managed to end on a positive note, with a near 1% rise, reflecting the resilience of this marketplace. Now let's turn our attention to the materials sector. We've witnessed a bit of a drag here, primarily due to the strengthening US dollar. When the dollar strengthens, it often results in downward pressure on commodities that are priced in dollars, such as gold. This, in turn, can impact the materials sector, which includes mining and related industries. Moving on to energy shares, we've seen a significant influence from oil prices, which have reached their highest level in over 7 years. High oil prices generally translate into increased revenues for energy companies, which can boost their stock prices. This has contributed to the gains in energy shares on the TSX. It's also worth noting that these sector-specific trends are not isolated. They're part of the broader market dynamics. For instance, the performance of technology shares and the impact of oil prices on energy shares can influence the overall market sentiment, and consequently, the performance of the stock market. As you can see, understanding sector-specific trends can provide valuable insight into the overall stock market. Finally, let's wrap up with a summary of what we've discussed. We've covered a lot of ground today, so let's summarize the key points. The financial landscape is a vibrant tapestry, with every thread contributing to the overall picture. Major indexes like the Dow Jones Industrial Average, the S&P 500, and the Nasdaq Composite have all been on a roller coaster ride recently, with minor losses and gains dotting the landscape. It's a dynamic environment, influenced by a multitude of factors. Influential factors such as PCE inflation and geopolitical tensions have played critical roles. These elements have caused ripples in the market, pushing and pulling the indexes in different directions. The recent performance of technology stocks, for example, has driven a rally in some indexes, while concerns about rate hikes have applied pressure in other areas. Sector-specific trends have also been instrumental in shaping the market. We've seen the tech sector rally, while the material sector, including gold, has felt the pinch due to a stronger US dollar. These trends are not isolated events, they are interconnected, with each impacting the other, creating a domino effect that influences the overall market. Remember, these trends and factors are not static, they are constantly in flux. They ebb and flow, wax and wane, and it is this dynamic nature that makes the financial market so intriguing and at times unpredictable. As an investor, it's essential to stay informed about these trends and factors. Understanding them can help you navigate the financial seas with greater ease and make educated investment decisions. Ignorance in this field isn't bliss, it's a recipe for disaster, so immerse yourself in the financial world, keep your finger on the pulse, and let knowledge be your compass. Remember, staying informed and understanding the factors influencing the market can help you make educated decisions, so keep an eye on the trends and happy investing.